Researching stock as a business. Before you searching stock as a business, before you came to this particular video tutorial, you should have went through factors that affect supply and demand. And the only way that you can hone in on the factors that affect supply and demand is through research. Without research, you're not going to be able to find out what the financial performance of a company, the management team, the industry, and the performance of the industry. You're not going to be able to figure out what is going on as far as the social environment. How is that company doing socially within the environment? Legal issues that are pending against the company. Government regulations that are affecting how the business operates. And so in this particular video subject, we're going to go over financial condition, industry, market conditions, and business model. Just like a bank investigates or researches you before they give you a loan, which is an investment in you, the bank, every time they give you a loan, they're going to research you to find out how much money you make per month, to gauge the ability of you to pay back their principal along with the interest. So in essence, the bank is actually making an investment in you. So just like they would make an investment in you and they would do research and their due diligence on you, you must investigate any business before you invest in it. Researching a particular business or stock, that helps you gauge the risk of your investment. A bank looks at your income for the last 12 months or the last year and they're like, wait a minute, he can't afford to pay us back with this. And so they determine that you are a risky investment. The same thing in regards to researching a business. You're able to find out the risk of that particular investment. And as a result of your research, you're able to make sound and educated investment decisions. So there are several things that you should look at before investing in any company, and they include financial condition, the industry that it's involved in, market conditions, and the business model of the company. Alright, so the financial condition of a company is a good gauge of how well the company is performing. And just like an x-ray provides a doctor with a wealth of information about your health, the financial condition of a company can tell us a lot about the well-being of that company. Ways that you can figure out the financial condition are through analyzing the profit and loss statement, which gauges how much sales are made with the company, and it also details the actual profit, which is the sales minus all of the expenses that were incurred, and that will help you gauge what the profit was. And also the balance sheet, which is a highlight of the business assets and their liabilities. Liabilities include their long-term debt or their short-term debt. And we'll cover these different financial statements in another video tutorial. But just understand that you have to research the financial condition of a company to find out how the company is performing. Industry. It's very important to look at the industry that a company is involved in. This pretty much defines the company's primary business. Industries can be broken down into sectors or smaller niches. For instance, the retail industry is broken down into several sectors. Grocery retail, there's drugstore retail, specialty retail, clothing retail, mass merchandise retail, department store retail. And as you can see, these are clearly defined or segmented particular sectors. Walgreens is heavily involved in the pharmacy business. Home Depot deals with home repair services and products. The Gap, they're a clothing store. The Gap would not be directly competing with Home Depot because they're totally different sectors. Yes, they are dealing with retail, but it's a totally different sector. Once you are able to find out what the company's industry and their sector in, then you're able to actually research more information and determine valuable information about that particular company, which will help you in your making an educated investment decision. Market share, which once you understand what your company's industry is, you will be able to look at the market share. You can see if the market is saturated, which means that there are a lot of competitors in one industry. Like the restaurant industry, that's a highly competitive industry. There are restaurants everywhere. So that is an example of a market or a industry that is heavily saturated. Market share refers to the percentage of sales in regards to everybody involved in that industry. And here we're going to kind of take a look at an example of market share. If you look here, we're highlighting the soft drink market industry, which includes Coke, Pepsi, and Dr. Pepper, and there may be a few more, but this is just for an example. And let's say that's a soft drink market industry. They generate $500 billion in sales annually as a whole. Well, if we look at these three competitors, or three companies that are involved in the soft drink market industry, we'll see that Coke generates $250 billion in the soft drink market industry out of the $500 billion of sales that were generated as a whole. You'll see that Pepsi generates $125 billion along with Dr. Pepper. And so what we can conclude here is that Coke has a 50% market share in the soft drink market industry, while Pepsi and Dr. Pepper have a 25% market share in that particular industry. And what we can clearly see is that Coke is a leader in the soft drink market industry. So once you find out the industry that your company is involved in, you can even look more in detail to see where your company that you're actually looking at, where does it rank in their particular industry. Industry trends. Knowing your industry trends can tell you how the businesses are changing. A good example of this is the media industry. There was once upon a time where the newspapers and TV and radio and magazines, they ruled the world. They were the dominant media force. This is where people got the most of their information, from listening to the radio, reading the newspaper, magazines, or TV. Well, now, since the emergence of the internet as a media force, the entire media industry has totally changed. You have people or companies that were once heavily involved in newspapers. Now they are more focused on putting their news online versus in the newspaper. And they are embracing the internet now. In the past, they weren't embracing the internet, but it's no rebuttal of how powerful the internet is at this point in time. Industry practices or norms. An example of this is like the profit margin. In retail, a 3% profit margin is good. However, in other industries, a 3% profit margin is horrible. The only way that you can know if a 3% margin is horrible in your particular business is to actually understand the industry that they are involved in. And you will know if a company is performing above or below industry standards based on the knowledge of the industry practices or norms. And just a quick note, the profit margin is equal to profit as a percentage of sales. And if you do not quite get what profit margin is, we will actually discuss that in other video tutorials or supplements that can give you a good gauge of what profit margin is. So don't worry about that. Just understand that you need to understand industry trends or industry practices or norms in order to properly evaluate companies that you're trying to invest in. Market condition. Market condition refers to the overall environment pertaining to the customer's demand and ability to buy, and this directly affects sales of a company, which affects the financial performance of the company. Because remember, financial performance of a company has a lot to do with the amount of sales that a company makes. And of primary importance, market conditions, you want to look at them in their current state. what's the current state of affairs. Right now, we're dealing with economic recession. We're dealing with a job rate that there are a lot of people out of jobs right now. So that's going to affect the amount of sales that a company is going to be able to generate, because there's not a lot of people with buying power out there. The environment includes social changes, economic changes, which we just covered, weather irregularities, disease, and government intervention. And a couple of examples of market condition due to changes in the overall environment. We're going to take a look here. After the attack of the World Trade Center, the airline industry took a devastating blow in sales. A lot of people, after that particular attack, they were afraid to get on airlines, to take a trip, because they were afraid that somebody may try to hijack the plane and run it into a building. And so a lot of people did not purchase airline tickets for a while, and buyer confidence in that particular industry took a blow. However, in retrospect, the defense and security industries had an increase in sales. Remember, following the World Trade Center bombing or World Trade Center attack, that we were involved in a war in Iraq. We also were trying to figure out ways to increase our security systems in our major hubs, our major cities. And so the defense and security industries had a major increase in sales. Let's look at the aftermath of Hurricane Katrina. And the hotel industry, especially in neighboring cities, had an increase in sales. After Hurricane Katrina, a lot of people fled to Houston, and they fled north of Louisiana. And a lot of these neighboring states had a influx of customers, and so therefore they had an increase in sales. Oil and gas companies, they had spikes in sales due to evacuation efforts. People had to fill up their gas tanks to be ready to evacuate. So a lot of the gas stations had a major increase in sales due to the evacuation efforts. Another example is governments heavily tax cigarettes. So cigarette companies may have issues with sales. The cigarette prices are ridiculous now. I don't smoke, but I do see the prices of a pack of cigarettes. They're $5-6, which is ridiculous. And since people realize that tobacco smoke causes cancer, this may trigger people to stop smoking, which will hurt cigarette sales. Business model. The business model is simply a blueprint of how the business operates and how it makes its money. And a business model can tell you if the business is run efficiently or if it's mismanaged. It can tell you how many ways a company earns money. It can talk about or tell you the company's business strategy. And within each industry, there are standard business models. Each company within that industry has a customized, they've customized the way that the industry works to their specifications, or the way that it best fits their business strategy. And the difference in business model is what gives a company its edge against the competition. And I know that seems a little jumbled up. It seems a little confusing. But basically, what I'm trying to explain is, let's look at the insurance industry. The insurance industry operates pretty much across the board in the same way. However, there are certain insurance companies that have customized their business model in order to gain market share or gain more customers. For instance, there is, I'm not sure, I want to say it's State Farm, the auto insurance company. They have a program in place where they give back a portion of the premium if the customer doesn't make a claim for the entire year. Okay, this is not a standard business practice in the insurance industry. However, this is one of the customizations that State Farm has done with their particular business model, and this is what kind of gives State Farm an edge against the competition in the insurance industry. Business models are always changing. Especially, I mean, we talked about the emergence of the internet and how that changed the way that media companies operate. The most important thing that you want to find out by looking at a business model is how the company makes its money. And basically, if after viewing the business model you cannot clearly see what the product or service is, then you should not waste your time with that particular company. I got that from Warren Buffett. Warren Buffett basically says if he can't understand what the business is and how it makes his money, he doesn't fool with it. He has to understand how the business works. A good example of that is Facebook. When Facebook originally came about, they had a strong membership base. However, they didn't have any type of business model or strategy in place to monetize the traffic. So basically, Facebook was just a membership community, basically, that there were a bunch of members that weren't really spending money. So Facebook had to figure out a way to monetize the amount of subscribers or the amount of members that they have. And I think right now they have basically started, they have an advertising program where they are people or businesses who want to advertise with Facebook, they pay them to advertise, and this is how Facebook is able to monetize that particular business. But keep in mind, in the beginning, if Facebook was to come to you and ask for an investment, the question that you would ask them is, wait a minute, I see that you have a lot of members coming in, but how is it that we make money? How does Facebook make money? The other things that the business model will tell you is what lines of businesses the company is involved in. Most companies, they have multiple lines of businesses and they have several sources of revenue. And lines of business, what I'm referring to is the industries or markets or sectors that a company is involved in. And let's look at an example of this. PepsiCo, their primary business is soft drink beverages. However, its other businesses includes Frito-Lay, which is part of the snack foods industry. Another example is Microsoft's primary business is software. However, it is also involved in the video game console business, the Microsoft Xbox. In summary, the most important thing that you need to do before you make any type of investment decision is to do your research. When investing in stock, you should look at the financial condition of the company, the industry, market condition, and the business model. And if you can understand these factors, then you will be able to make an educated investment decision.